Good morning, finance students. We want to look at the cash budget today. I know on Friday, the last time we met with my husband, he looked at a personal budget just to give you an idea of what we'd be getting into. So now we want to look at corporate budgets, particularly the cash budget. Let's go to Wolf Den and take a look at what's there and show you where you need to look for the next week's assignments. Okay, if you'll go to Test 3 material under your Handouts tab, the first three items would be what you need. You have Chapter 4, Part 2 PowerPoints, because we went over Part 1 with depreciation. There's a little bit I may come back and catch in Part 1, but I've removed it for the time being. You also have your homework problem that you need to pull up, and that will be submitted in class on Friday. My husband will be there Friday, October the 28th, for you to submit that. And then the problem we'll look at today is called Cash Budget Problem, and it goes along with the PowerPoints. I will post this video under Finance Cash Budget, Susan Sheridan, and I'll send you a link and try to post it on Wolf Den also, since there's been some confusion there. Okay, so the first thing I want to do is let's go to the PowerPoints. I already have them pulled up, so if you'll click on your PowerPoints and you can follow me on the video. Okay, again, this is Chapter 4, Cash Flow, and want to talk just a little bit about the financial planning process. Long term is called strategic. You need to know some of this terminology for Test 3. Short term is called operating. Again, short term is normally less than a year, and that's when we're looking at our normal operations, what we're in business to do. Long term is when you're looking at building a new plant, buying a new piece of equipment, something very major, something large that's going to last us a long period of time, much longer than a year. Okay, so you budget for both of these items just like you would budget for a car, perhaps. If you were buying a car, it would be a long-term investment. Short-term would be what you're doing for the next, week or year. It would involve probably renting a home or buying groceries or something of that nature. Okay, now two aspects that they talk about here is that are very important in the planning process for a business would be the cash budget, and then doing what we call pro forma. Pro forma means as if. Those are the budgeted financial statements, and you already know what the financial statements are. That's your balance sheet, income statement, statement of cash flow, and your statement of owner's equity. Okay, so normally the balance sheet and the income statement are pre-planned, and it's a budgeted or pro forma statement. Okay, again, long term, just some examples here: buying fixed assets, research and development, marketing, looking at a new product. Apple has new products in line for the next few years. So we're looking at a span here of 2 to 10 years. Steve Jobs actually had 5 years of products in line when he passed away. And that's called your planning horizon. Capital structure: how do you plan to pay for those items? Are you going to borrow? Are you going to sell stock? And other sources of financing that you might look at to buy these major items. Short term, again, has to do with what you're doing in the current year. I guess in this case it might be less than 2, but just keep in mind a year is a good time span to look at operating. You want to forecast your sales. That is the very first budget that's prepared, is your sales forecast or your sales budget. And then you want to look at other budgets called operating budgets, cash budgets, and your pro forma financial statements. Those are pretty short term. Now, this particular slide shows your sales forecast as being the first item that's prepared when you're doing this planning. So keep that in mind. That's a multiple choice. You need to know. Then from that, you go on to doing a production budget. You do your budgeted financial statements, your income statement, your balance sheet, your cash flow comes this direction, okay, and that's when we're going to get into your cash budget. Okay, now let's look at, here's your long term over here way on the side. So your long term is Over here in the far corners, the cash budget is the one we're going to focus on today. If you go into accounting, I think it's 220, you will be looking at some of these budgets, okay? Now, this is actually a slide from Accounting 220. It's kind of a more condensed and detailed slide than the one that we just did. Again, notice your sales budget is the very first one prepared. I want you to look at this. This should be over a little bit further. These are your operating budgets. It's too far over. It didn't slide where it should have. But you need to know the distinction. Operating budgets are those that are going to be very short term. It begins with your sales budget, going through other budgets that are prepared to produce your product and then get it on the market and sell it. Your financing budget, where you're going to get money, comes in with the cash budget, the one we're going to prepare. Your investing budget, where do you put that money, is your capital expenditure, where we're going to spend it. So we're focusing here on this financing budget, which is the cash budget, and then over out to the side are your pro forma or budgeted financial statements. So this multiple choice, there's a couple from this. You need to be aware of which ones are in which categories, okay? Now, the cash planning process. Again, this reiterates the cash forecast is first, which ties into the cash budget. So that's the very first thing that's prepared. Let's go ahead and focus in on this cash budget. Again, it says it usually covers a 1-year period, or it's often divided into smaller time frames. We're going to look at about a 3-month budget for a cash budget. This is the format. Now, they have what? This would have been a year's budget if you started with January and went through December, but this is what the cash budget format looks like. You have your receipts, you subtract your disbursements. That gives you your cash that's coming in from operations. You take your beginning cash balance that you started with for that month, just like you would in a checking account, and then you subtract from that your ending cash balance would be derived from that. And notice how that ending balance becomes your beginning balance in the next month. Sometimes companies want to keep a minimum amount of money in the checking account, and that's maybe for loan purposes, so you have to subtract that out. If you have excess cash, you can decide what to do with that. Sometimes you don't have excess cash, but you have to go borrow short term. And my boss used to be a finance loan officer in a bank, and that's what he did a lot. Businesses would come into him and get short-term lines of credit so that they could cover their overdraft or meet their regular payroll or that sort of thing. But this would be month by month if you filled in the blanks here, starting with January going through December. We're going to prepare a 3-month budget. Let's see if I can get down and the next slide. Okay. And the budget we're going to be preparing is called Colson Industries. So we're going to pull up a form on Wolf Den. I want you to work along with me, but then you can go back and you can look at it again on the PowerPoints because the answers are here. Okay, and this is the company we're going to be looking at. Now let me warn you that my phone normally lasts for about 20 minutes. So if it goes out, I will have to do a part 2, and I'll just tell you that up front. I guess I have too much on this phone. Okay, let's go back to Wolf Den. I'm going to minimize this, but this is the problem we're going to be working with, and let's find it on Wolf Den. You need to pull up, here, we've been doing these PowerPoints, Chapter 4, Part 2. You need to come down and pull up this cash budget problem. And when you pull that up, now you can see me, hi, and my phone with flowers. Okay, this is what it looks like. It's the same one that's on the PowerPoints. We're going to work through all 3 parts. There are 3 parts here. There's a cash receipts. Notice we have several months there. We're preparing this budget for October, November, and December. Okay. Then we're going to come down and we're going to do cash disbursements. That's what this part is, the second part. And then we're going to take that and we're going to fill it in to the budget like on that form. that you just looked at, and this will be the cash budget. And we want a cash budget for October, November, and December. Okay, so now you know what we're going to be doing. Let's see what else is here. This is just 2 pages. So print you that out, or you can just follow along and come back to it. But you will have a homework problem similar to this. Okay. Now, what I want to do is come down to my page, and I also want to give you some steps from the PowerPoint. So briefly, let me go back to the PowerPoints. This is the problem. Let's read through it. Colson Industries is a defense contractor and is developing a cash budget for October, November, and December. Okay, it gives you the sales. August and September were 100,000 and 200,000, and then 400, 300, and 200,000 have been estimated for October, November, and December. Now they give you some more information here. Historically, 20% of the firm's sales were for cash, because if you stop and think about this, if we are on accrual accounting, we're accepting cash and credit card. Okay, so 20% of the firm's sales have been for cash. And then when people pay us, or they promise to pay us, not everybody pays in the first month. So what's happened here is 50% will pay in the first month, 50% of the sales. And then 2 months later, we'll get some past due money. 30% of the sales would be paid 2 months later. Okay. And then it also tells some extra income from dividends that are going to be received. Okay, so let's look at the steps. First of all, calculate what cash sales would be. Look at August through December, and we want to get a calculation of cash sales. Now, let's look at our problem. Come down here, okay? Okay, this is the same problem. Now, sales forecast. I want you to draw a little line here, and it's hard for me to be neat here with this holding this camera, so bear with me. But above this line, we're going to write the sales forecast, and we're going to truncate it, meaning we're going to cut off the last 3 zeros to make it easy for us to do this multiplication and whatever else we need to do with our calculator. So you need to make sure you have a calculator. Okay, I have a TI-30. You also need to look into getting one of these for the first week in November, because we'll be working problems. So you need a TI-30 calculator that's going to raise to a power beginning the first week in November. You'll need that for the future test, okay? But in the meantime, if you have a simplified one or your phone, you can do that. Okay, in August, now if you go back to the problem and you read through here, it said in August we had $100,000 and $200,000. So put that down. Again, we're leaving off the last 3 digits. And then it said that sales of 400, 300, and 200 were for October, November, and December. Okay, October, November, and December. Okay, first thing we want to do, how much of this was cash? Well, it says 20%. So for each of these, you can multiply times 20%. I may have to change pens. Okay, and that's going to give you your cash amount. So just underneath August, 20% of 100 is going to be 20. If you put the 3 zeros, that would be 20,000. 20% of 200 would be 40 or 40,000. 20% of 400 is 80 or 80,000. And 20% of 300 would be 60 or 60,000. Okay, and then you have 20% of, let's see, December. I think that's incorrect. Okay, right here. Let's go back. Okay, December was 200,000, so I put down the wrong number. Okay, put down 200 right here. Because go back in your problem, and it said for October, November, and December. So December should be 200,000. So 200,000 times 20 is 40. I'd actually put the answer down there. So catch that mistake, okay? Now, those are your cash sales. Now, sometimes if you're working on a cash basis, all of this would be cash. So you might want to look into it and be aware of that in your problem, okay? Now let's go back to the PowerPoint, step 2 here. Step 2 says calculate the collection of your accounts receivable for the first month. In other words, multiply your sales times 50%. There's a 1 month lag, so put it under September. So let's go back down, okay, right here where it says 50%. That means that in August, when we sold this 100,000, 50% of that will not be paid until September. So that's where you want to multiply times 50%, okay? So 50% of 100,000 is going to be 50, and that's going to be paid right here in September. Those are accounts receivable. In September, you had 200,000 in sales that will not be paid until October, because normally we will give 30 days for people to pay their credit cards or whatever they owe us. So 50% of 100,000, 200,000 means that 100,000 of this month's sales will be paid in October in cash. Okay, October, we had 400,000 that will be paid in November. So that's going to be 50%. 50% of 400,000 means that we have 200,000 in November. Okay, 300,000 of November sales will be paid in December. So multiply 300,000 times 50%. That's going to be 150. And again, if you put your zeros, that would be 150,000. Okay. So you get the idea of the 1 month lag. We give them 30 days, so they send in a check in 30 days. Now, we do have past due customers, so let's look at number 3. Number 3, calculate the collection of accounts receivable for the second month. Okay, multiply sales times 30%. We have a 2 month lag and put it under October. Okay. That means that in August, some people took advantage and waited 2 whole months before they paid us. So that means August would not be paid. Let's see if I can get my pen to write. Okay, August is not going to be paid until November. Okay, so we're going to put our answer here under November. And we want to multiply times 30%. So that 100,000 there, if you want to just pull it down, you can here. Okay, we're going to multiply times 30%. 100 times 30% means that in October, we will collect $30,000. Okay, that's 2 months away. Let's look at September. September's 200,000. These people will not pay us until November. So let's pull that down. Our answer here will be put under November. We want to multiply times 30%. So 30% times 200 is 60,000 under our November. Okay, then we want to look at October. Okay, October will not be paid until December. So coming on down, 30% times 400 is going to be 120,000 that will be paid in December. Okay. Now you wouldn't always draw these lines, but I just want you to be able to see it clearly, and I'm trying to use the different pens. Okay. Now that's confusing, I know, and maybe yours won't be that complicated. I don't think it is, but just be aware that sometimes when you have accounts receivable, this kind of thing happens. And then we're going to get into write-offs later on. Well, actually, I did that in Accounting 210, but if they don't pay over a period of months, we eventually write them off. Okay, let's take a look. The last one, recognize the cash dividend. Okay, so that's the 4th thing. Let's look at the cash dividend or any other interest. They'll receive a $30,000 dividend from stock in what month? December. Okay, December 30,000. So come under the month of December, put down 30, okay, because we've truncated it. Now, according to our slide here, we've taken care of all of the inflows, okay, everything that we're planning to get in. So let's total this up. Now, our total for August is 20. Our total for September was 90. Our total for October is 80, 130. Now, do not go back and add anything above this line. You do not want to add sales forecast. Do not add it, okay? Be careful. You'll miss this problem on the test if you do. So below the line, 80, 130 is going to give you 210. 60, 260 is going to give you 320. And 40, 150, 120, and 30 will give you 340. Okay, so these are your receipts. Okay, now I'm now at 21 minutes, and so I'm going to cut this off with cash receipts. I want you to do that part for homework tonight. Okay, so this is homework on Monday. So go back to Wolf Den. Okay, and let's find your tab on Wolf Den. I want you to pull up cash budget homework. Where is it? Cash budget. Okay, right here. Cash budget homework. Let's take a look at it. Okay, all I want you to do for tonight is this first part, using these sets of PowerPoints and the information I just gave you. Now, I want you to notice something.